Welcome to one more episode of Tuesday Technical Talk. Today's topic is basics of options, and I know it's this even it is basics, but you'll have a big aha moment even if you're an expert options trader. So options is something which is very popular nowadays, and it's very volatile, and it's actually one of the tools to make your small money into big money. And it's an official, legal, ethical, and moral way to have multi-baggers on a daily basis, but provided you have the right knowledge. Now, if I go back to my journey learning options, it was way back when it started in 2001. I traded my first option was around 2004-5, and it was a fluke trade by luck by chance. And I bought a 5,000 rupee option of Tata Motors, and it turned into 1.5 lakhs in just a matter of 2 days on the last day of expiry. That's when I realized the power. The money is okay. Money was great actually. And then I realized that, okay, this was a fluke. This was luck by chance. Like what most people do on the last day of expiry, they buy out of the money options and wait for a miracle to happen, which happened that day. So then I realized that it's very powerful if you learn it the right way. I started learning about options, and most of the books and the seminars and workshops, whatever was happening in those days, was only talking about delta, gamma, theta, put call ratio, open interest, and all that implied volatility. So it was slightly difficult to understand, as I believe in simplicity, and I was like lost for 4 or 5 years into all this complex things. And then I finally started doing my own research, and I started simplifying options using simple technical tools. So let's talk about what the book says. What most programs and what the book says is the technical or the theoretical language. Says option, when you buy, it's a right to buy or right to sell or obligation to sell. All that still doesn't make sense to me. You just need to have a simplified version of this matrix, and that's what we call the Malkanzi options matrix. So let's understand this very simple. When do you buy a call? When do you buy a call is when you are bullish on the market. You need to have a clear view on the market. So any indicator or any tool or any strategy you use should give you an exact or at least a clear vision that the trend is bullish or bearish. If the trend is bullish, whatever indicator, let's say we use RSI, it's above 60, it's bullish, so we buy the call. You may use MACD, you may use stochastic, doesn't matter, but it should give you a clear view. Then if you are bearish, you buy a put. Say for example, again in our case, RSI below 40, buy a put. Now the question here is, most people think that buying a put and selling a call are same. At least I used to think that time. And then there's a big difference. When you buy a put, you are bearish. That means you expect the market to go down, right? And when you are selling a call, you are not expecting the market to go up. And there's a huge difference. It doesn't mean if it doesn't go up, it will go down. It can resist, it can go sideways, it can be choppy. And that's the big difference. And this is like a big aha moment for us when I designed this. And now it's become very popular in the options circle and option traders, is not so bullish. So how do you not so bullish? In our case, again, if I use the RSI example, if it is not going above 60, that means it's not so bullish. So I will sell a call, right? So next, in same way, if it doesn't go below, let's say there's an important support zone and there's an important window and gap, like you must have seen in other episodes which you have seen, all the tools which I'm talking about, like gaps and windows and candlestick patterns and Fibonacci support and all that. So if it is that important support, not so bearish, you sell a put. I suggest that you take a snapshot of this right now and think, and whenever you try to trade options, think in this terms: whether I'm bullish on the market, whether I'm bearish on the market, or it doesn't look so bullish or doesn't look so bearish, or it's support or resistance, it's a breakout or a breakdown. So all that becomes very easy. What should you do? Right now, as far as just to make it clear that when you buy options, you are paying the premium. Like you are buying it's like buying a ticket. Right? If it doesn't work out, you lose the ticket price, you lose the premium. But when you sell an option, that means you're going short, you have to pay the margin. And the risk can be high if you don't have a right stop loss. right? So let's now go to the next part, which is very simple. My favorite, RSI. how do you use RSI? Why options? First of all, that's important thing is why you should trade options, right? Nowadays, weekly expiry has started in the last 5 years, and especially on Nifty and Bank Nifty, which has created huge volatility in the last few years. And you have great opportunities almost every alternate day or every week, at least twice, where a 100 rupee option becomes 500 daily basis or almost an alternate day basis, which is huge. So once you find out the strategy, like our expiry special strategy, you can capture those moves and you can capture that 100 rupee can even becomes 200, which is great. If you look at the percentage return, I think that's great in terms of percentage return on a daily basis, right? Weekly expiry, huge movement nowadays, and 2021, 20 was the leap year, and I was been talking about that it's a leap year and it's going to be very volatile, and it turned out to be the most volatile year in the last 5-10 years. And 21 is already a start of a bull market which can last for another 2-3 years. So there are huge opportunities like right now, and you can see this volatility on this just one snapshot, and you can even see that on a daily basis. You can see this percentage wise 150% up. An option which is up by 150%, 200%, sometimes 500%, and option which goes down by 50%, 60%. So even in options selling or even in options buying, there are huge opportunities which you can capture, right? So you should, now that you know that there is a lot of potential in the market, especially options trading, there is huge movement and volatility. There are strategies which are available, of course, with our options mastery program and OPL. You can learn this option in the simplest way possible. And if you have the will and if you have the time and the effort to learn and make it worthwhile and make this journey smooth, make more money from options, then there is no doubt you should not learn about options, right? You should. And it just takes like few weeks or maybe few months to master it. And once you have the skill, it's a lifelong skill. Right, nowadays they have options in commodities also, and then be more options in more stocks and more other things and cryptocurrencies and all those things. So once you acquire the skill, it's a lifelong skill. It's worth paying that time, amount, money, effort, hard work, and get the skill done, right? So let's talk about unconventional RSI, which we teach in our programs. You must have seen some videos on that, also some episodes on that, where we talk about RSI in a very simple format. You're going to use 40. You're going to use 40 and 60, 0 and 100. This is the thing. If it is below 40, the trend is bearish. If it is between 40, 60, the trend is sideways. And if it is above 60, then the trend is bullish. That means what? In terms of options, above 60, I'm going to buy options. Below 40, I'm going to buy options. Here, I'm going to buy a call. Here, I'm going to buy a put. Here, in between, it's not bullish, not bearish. So if it is when it is near 60, I'm going to sell a call. When it is near 40, I'm going to sell a put, right? So this is very, very simple. Using the RSI. Now you can use your tool. Many people use MACD, Stochastic, ADX, or JTI, CCI, and so many tools are there in the market. Or you can even use simple support resistance. You can just draw lines on support resistance. If you see it is above resistance, that means buy. If it's below support, that means this. And if it is between support resistance, it's sideways. Right, so you can use any tool and decide which. Now, if you have to write options, sell options. So you're looking for the RSI to not go above 60 or not go below 40. The arrows which are marked here, these are option writing opportunities. Right, you can see this. So many stocks are sideways, and you will always find some of the other stock or Nifty, Bank Nifty going sideways for months. That means you will have option writing opportunity every single month. You just have to do it, right? So that's where you have the writing opportunities. And let's look at the buying opportunities. It's very simple, about 60. So if you look at this one, like goes above 60. Now this is on a lower time frame, which is a 15. It's our expiry special snapshot. I am sure you must be aware about our expiry special strategies and option mastery program. In fact, if you can go and check out on the opl.in, you will find out the details about our next season of options mastery and the next season of OPL, Option Premier League. So what we have done is we teach the strategies in options mastery, everything, and it's an online thing and you can watch it multiple times. And then we help you implement the same thing in OPL. We call it Options Premier League, and the name comes from IPL. So when we have semi-finals, finals, quarterfinals, and there we apply those expiry level 1, 2, 3, 4, 5, and I trade live with you. And that's the like learning and implementation. It's only learning you can watch from this video. Like I have so many episodes, so many videos, you can learn. But where's the implementation part? When it comes to implementation, you get scared or you get numb or you're thinking or doubting. So if I'm with you and say, okay, buy this option or buy this particular strike price or don't do this or exit or book profit or pyramid, that gives you another level of confidence, right? So you can check out the details. So this is option buying strategy, and this is like you can see that 430 becomes 880 within a matter of couple of hours. Now this is official, right? So if I can capture this move and if I can learn how to capture this move, I think that skill is worth taking an effort at least to learn. And even if you do fail, I think you'll be much better trader than what you were before. Right, so there are so many opportunities. This happens on a daily basis. It's a put chart. That means the markets are going down, but in that case, I'm going to buy a put. And before that was a call chart. So in that case, I'm buying a call, and then it goes from all the way from 200 to 1,000 within a day, in a single day. Right, so there's huge potential, huge opportunity. You can do this on your own, and I want to take full advantage of your knowledge and all these videos. I hope you are liking this. If you like this video, make sure you share, like, comment. Also, let me know what topics you would like to learn from this particular series. And also check out the details of Options Mastery and OPL next season at theopl.in. I will see you in the next episode. Till then, thank you so much. Good luck and good trading.